Premium Hunters, and welcome to Better Options. I'm Andrew, and I've been trading options for over 25 years, and I'm consistently generating about $5,000 a week in premium from options trading. Each week, I'll be posting an update of my trades. Just a quick disclaimer, as you can see on the screen, I am not a licensed financial advisor, and the information provided on this YouTube channel is for educational purposes only and should not be considered financial advice. Please consult with a financial advisor before making any investment decisions. So why am I doing this? Well, first, if you're new to options trading and want to know if it's legit, I'm giving you the ability to see real results from a real trader. And second, my goal is to build a community of people who are interested in options trading. Options trading is a complex topic, and there's a lot to know and learn. As long as I've been trading options, there's still plenty for me to learn. Okay. If you've watched my video for the first 2 weeks, I showed you that I made $6,154 in the first week and then $9,251 in the second week of 2025. Well, as it turns out, I had an error in my tracker which caused the profits for those 2 weeks to be overstated. After correcting that error, my actual profit for those 2 weeks, as you can see on the screen here, this is the corrected data. It's $4,174 for week 1 and $6,004 for week 2. So the correct total for the first 2 weeks of January 2025 is $10,178 with an average of $5,089. Still quite good in my opinion. But since my goal is complete transparency on this channel, I just wanted you to be aware of those errors. So with that, how did I do for week 3? Did I do better or did I do worse? Stick around to find out. And if you're interested in options trading, like, subscribe, and click the bell notification so you can be aware of more content when I upload it and you can follow me on my trading journey. Here's the format I use for my videos. First, I'll cover all of my new trades, the strategy for each, and the overall goal for each one of those trades. And something that I'm adding this week is a chart analysis of my weekly wheel trades to give you a visual depiction of each one of the trades. So I'll pull up the chart and show you from a visual aspect what's happening in my trades. And I think that will help you get a better understanding of how those trades work. Next, I'll show you all of my closed trades. I'll talk about the strategy, the goal, the profit and loss for each, and do a performance analysis of those trades. Then, as time goes on from week to week, I'll do an analysis of my portfolio performance to see how I'm performing week over week. And then finally, I'll share any insights I have from this analysis. Just a reminder that I will be releasing future videos on all of the trades that I cover in these weekly update videos, including a step-by-step guide on how to execute them. So make sure you like and subscribe to the channel. So, now that you know what to expect, let's get into this week's update analysis. So as you can see here, total new trades is 12. That's quite a few more than I did the last 2 weeks. So I'm going to go through them rather quickly. If you want a little bit more explanation about these trades, go back and watch week 1 and week 2 because I do go a little bit more in depth. But let's go ahead and get into the 12 trades that I did for week 3. The first one is Planeteer, where I did a weekly wheel level 1 call. The expected duration is 3 to 4 days. I'm either going to take a profit of 50% or I'm going to get called out, meaning that these shares will get called away from me and I'll have to sell the stock. When I put on the trade, I immediately put in a good to cancel order to close the trade at a 50% profit automatically. And if you notice here, the strike price I highlighted as red. And the reason I did that is because that was an accident. The cost basis on my shares is $69.75. And so when I put in this call at $67, that locked me in at a loss if these shares were to get called away from me, because I would have been forced to sell at $67 when my cost basis was $69.75, forcing me to have a $2.75 loss. Fortunately, the trade closed for a 50% profit and I never had to actually realize that loss, so I got away with my mistake, but I just wanted to point that out. All right, so next is a level 2 call that I sold at a strike price of 77, and the expected duration, profit target, and exit strategy is the same for that option. Next is a level 1 call in Planeteer, and if you notice it's at 69. This is where I corrected my previous mistake. So you can see it's at 69, whereas my cost basis was 69.02. So again, it's a little bit below my cost basis, but you have to realize that when I sold this call, I'm collecting more premium. So at the end of the day, this would not have been sold for a loss when you take into the account the premium that I collected for this call that I sold. Expected duration and profit target and exit strategy are the same. All right, so next we have a level 1 call that I sold on Amazon for $222.50. Same expected duration, profit target, and exit strategy. Now we have the weekly wheel put that I sold on Google. There's no level on this because all I'm doing right now is selling cash secured puts and collecting premium. The strike was $187.50. Expected duration and profit target are the same. The only difference here is because they're puts, I'll actually get assigned the stock at $187.50 if the stock falls below that. All right. Another weekly wheel put on Google, which means that I did not get assigned the stock on the previous trade because I'm putting on another trade, which is what I do when I close out for a profit. I turn right back around and put another one on. So this time I put it on for $192.50. And the same exit strategy and profit target. Here's another one on Amazon, but this is a weekly wheel level 2 put. As you can see here, I have a level 1 call going, so I wanted to open up another level of puts. This is the level 2. At 220, open for 3 to 4 days. Sometimes it's longer, sometimes it's not as long, but the same exit strategy and profit target. You're going to understand a little bit more about what I'm doing here when I do the chart analysis, because I'm going to show you a visual representation of what's going on. Also, I do have a video on the weekly wheel. If you don't understand the basics of that strategy, I have it linked in the description, so definitely make sure you go watch that so you can have a basic idea of what I'm doing here. The next trade is another call on Planeteer. This is a level 2, and I sold it at a 77 strike. This is a level 1 call on Amazon that I sold at a $227.50 strike. Then I have a level 3 put on Planeteer that I sold at a 69 strike, and a level 2 put that I sold on Amazon at a $222.50 strike. And then finally, I have a Black Swan hedge trade that I put on. This is a new strategy that I am employing because there is risk to options trading, and that is if a black swan event happens. Essentially what a black swan is when the market just tanks. The last black swan event that we had was COVID, and when COVID happened, the markets went crazy. They sold off like crazy, and traders were losing tons of money if they didn't properly hedge their portfolio. And so that's something that we always have to be concerned about. That's something that we always have to be aware of. And so in order to make sure that I can keep playing in this game, I want to make sure that I have a good, viable black swan strategy that I can rely on. And that's what this trade is. So I'm putting it on to test it, to try it out. And if it is something that works well for me, then I will definitely make an instructional video to show you how it's done and a step-by-step guide of how to put it on. So now let's do some chart analysis of some weekly wheel trades to give you a better idea of what I've been doing. Let's start with Google. So you can see the chart on the screen, and this is a screen grab of the Google stock chart as of the close on Friday. So this is the most up-to-date pricing action of Google. And as you can see here, I have a yellow line drawn across the chart going off the chart. And what this represents is an options contract. The yellow line is at approximately the 192.50 price level, and the reason why it's a flat line is because once you open an option, the strike price doesn't change. It's always going to remain the same, so we have a flat line here. The length of the line represents the duration of the contract. This goes out until January 24th, which is the expiration date for this contract, and so we see a little clock at the end of this yellow line which represents the expiration date of this contract. The P means this is a put option. All right, so what happens here after I sell this put, if the stock at expiration is at or above the strike price of 192.50, then the option will expire worthless and I will get to keep all of the premium that I collected when I sold this put. Now remember, I put in a good to close order to close the trade at a 50% profit automatically if it reaches that point. So there's a good chance that this option could actually close out prior to the expiration date, and it probably will. Now it's important to understand, if you notice here, the price actually did get very close to my strike price. The stock can actually go below my strike price and it won't affect anything. Options typically don't get exercised until the day of or slightly before expiration. And it's very rare that they'll get exercised. Typically, if an option is going to get exercised, it's going to be on the expiration date. Every once in a while, it's a day or two before, but the vast majority of the time, it's on the expiration date. So if we're several days before expiration and the stock drops below my strike price, that's not an issue. It's not going to affect anything. Everything's going to keep on going. And as I said, as long as it's at or above the strike price on expiration, then the option is going to expire worthless and I get to keep my premium. Now, so what happens if the stock is below my strike price? Well, at that point, then I will be assigned the stock. I will have to buy the stock at $192.50. No matter how low the price of Google is on expiration, I will have to buy it at $192.50. So where this can be a little bit risky is if the market totally tanks, and let's just say Google goes down to $100 a share, I will still have to buy it at $192.50, which is what makes it a good deal for the option buyer. But that's why we only do this on stocks that we want to own anyway, because if we would have bought this stock, we would have been in far worse condition. We would have bought it at a higher price, and we would not have collected any of the premiums that we are collecting on these options that we're selling. And then once I own the shares, now I can turn around and sell calls against those shares that I own and continue collecting premium. So now let's take a look at my Amazon weekly wheel position. The red line at the top indicates the shares that I own. I own 600 shares at $230 per share, and my cost basis is $214.57. I purchased those on 12/21 because I was running the wheel strategy on Amazon and selling puts and was eventually assigned on 12/21 and had to pay $230 per share. So this red line indicates the shares that I own at $230 per share. Now, how do I know my cost basis is $214.57? Well, let me show you. I'll move my image over to the other side so that you can see this table. And this is a table that I use to track my trades so that I can know what my cost basis is. You can see at the top my assigned price is $230 per share, and you can see a series of premium collected from cash secured puts, and you can see a series of premium that was collected for selling covered calls. You add all those up, subtract the total from $230, and you get $214.57. It's very important to track your cost basis on these trades, because if you end up selling a call that is above your cost basis, you will then have to sell the shares for more than what you paid for them, which means that you are going to take a loss. So with that said, we now know that this indicates shares that I own, 600 shares. The yellow line here is the level 1 calls. Those are the level 1 shares that I own. So these are the level 1 calls that I sold against those shares. I sold the calls at $227 $17.50. I sold the options on the 17th, and this contract will expire on the 24th. So what happens if the stock stays below this strike price? Then I get to keep that premium. Again, remember that I immediately enter a good to cancel order to sell at 50%, so there's a good chance it will never get to expiration. But if it goes above the 227.50, then I have to sell my shares at $227.50 no matter how high the price of Amazon goes. And even though I purchased these shares for $230, my cost basis is $214.57. So I've got a guaranteed profit there no matter what. And the next yellow line you see on the chart here are level 2 puts. So because I want to ensure that I can continue collecting premium on this strategy, even if the stock does tank, I open up a second level round of the wheel trade at another level and start selling puts at that level. This level is $222.50. I opened it on the same day and it expires on the same day. So if the stock stays above it, I get to keep that premium. If it drops down below it, I have to purchase the shares at $222.50 and then I'll start selling calls against them. You see how the cycle continues? And finally, we'll look at the wheel strategy trades that I have going on with Planeteer. As you can see on the stock chart here, I have 300 shares at $78 per share with a cost basis of $76.29. Those were purchased on January 10th. These were actually level 2 shares. The reason you don't see the level 1 shares on this chart is because I was called out of those shares this week. And I will show you that when I go over the closed trades section of this video. But with that said, you can see the yellow line for the level 2 calls that I sold against these shares at 77 strike price. Same thing with Amazon. If the stock price goes above the strike price, I will get called out. If it stays below, I'll get to keep the premium. And then I have a level 3 put at $69, which I sold on the 17th. Both of these expire on the 24th. And the same thing, if the stock price stays above, I get to keep the premium. If the stock price falls below, I will have to buy those shares at $69 a share, in which case I will start selling calls against those shares. All right, so let's get into the closed trade section for week 3, January 10th through the 13th. I had 17 total closed trades. 15 of those were profitable. Actually, they all were technically profitable, but for the weekly time frame, they show up as a loss because I already counted the profits in previous weeks. If you took the profits from previous weeks and added them to the loss of this week, then we would have a profit. But it all works out in the wash. So if I report it under those rules consistently, then yes, I do have 2 losses for this week, which gives me a win rate of 88.2 and a loss rate of just under 12%. So let's take a look at those trades one by one. The first one is Planeteer. It's a level 1 call. I made $353.25. It was open for 5 days with a profit per day of $70.65. A return on capital of 1.75%, and an annual return on capital of 127.7%. The next trade was another Planeteer. This was a level 2 call where I was only able to make $23.26 over 3 days for a $7.75 profit per day, 0.1% ROC, and 14.5% annual ROC. Why so little? Well, the stock price actually dropped pretty far below my level 1 stock price, which was $82. And this was all the premium I could collect at that time. The reality is, and this is the risk of this trade, the farther the stock price drops below your assigned price of the stock, the more difficult it becomes to collect premium. The further away from the strike price those calls are, the less premium you can collect. Next, we have another level 1 call where I made $215.26, and you can see my PPD, ROC, and annual ROC. Here's a strangle that was actually opened in 2024. I ended up making $517.42, and you can see it was open for 40 days, and you can see the rest of the numbers. Here's a level 1 call in Amazon where I made $598.48 over 4 days. Here is a 112 trade where I made $3,687.06 in 35 days. These are very profitable trades, and I love putting them on and taking them off and putting the cash in the bank. But the reality is, and I'm learning about the risks of these trades the more I study them, if we have a black swan event, these trades can totally blow up your account. And so I've decided to put a pause on these trades until I can ensure that I have a good hedge to ensure that I don't blow up my account, which is part of the reason I am testing that black swan hedge trade that I mentioned earlier. So for now, I'm going to put these on hold. I'm actually going to do these in strangles, and I am already doing strangles with gold futures. And I think this is a really good supplement to that trade because gold and the ES typically trade in opposite directions. So if the ES is going up, gold typically drifts lower. If the ES drops, then gold typically shoots up, because investors flee to safety and gold is considered a safe investment. So that's going to be my strategy in the meantime so that I can continue making some pretty good profits until I can figure out a good hedging strategy for the 112. Next, I have a weekly wheel put on Google where I made $568.45 after 1 week. And here I have another put where I made $386.89 after 1 day. Here is another level 2 put where I made $790.45 after 9 days. And here's a level 2 call where I could only make $2.24 on Planeteer over 3 days. A level 1 call on Amazon, $388.46 over 2 days. A level 3 put on Planeteer where I made $350.22 over 10 days. I made $550.42 on Amazon on a level 2 put. And here's another longer term trade that was open in October of 2024. I did multiple rolls. It went against me. This was a strangle where I ended up getting assigned the stock. I sold calls against it. This is my last set of calls where I made $1,128.70 over 18 days. And then if we go to the next page, you'll see where I got called out of the stock. And when I got called out, it's showing a loss of $6,512.70. This was actually an iron condor that I sold back in October 17th of last year. And between the initial sale and 3 additional rolls, I collected $5.74. Or $574 times 10 contracts, which is $5,732.94. I had to buy the stock for $97.50 on December 20th, but then collected $1,427.07 on covered calls that I closed before the end of the year, plus $1,128.70 that you saw in the previous slide that I collected in January, which gives me a grand total of $8,288.71. So even though I'm showing a loss of just over $6,500 here, if you took all of those trades combined, I actually made money. And here's the level 1 stock that I got called out of on Planeteer. And the same concept here. I'm showing a loss of $3,910.63. But if you take all of those trades where I collected all of that premium and combined it together, I'm actually showing a loss over all of them. But because this is only a weekly chunk of time, I can only show the difference between what I paid for the stock and what I sold it for, which is just over $3,900. And this is another weekly call, level 1 on Planeteer, where I made $113.61 over 4 days. And that takes us to our last closing trade. So let's take a look at the totals. The average annual return on capital was 153.7%. The average return on capital was 2%. The average profit per day was $86.85. The average number of days that I was in a trade was 12. And the loss that I took was $749.16. Again, if you took all the trades combined, it wouldn't be a loss, but this is just a 1 week chunk of time that I'm reporting, so if you add it all up, it does add up to a $749.16 loss. All right, and let's take a look at the annual progress so far. We'll go ahead and add the negative $749 for the week, and I've got a little asterisk there indicating that there were profits of $7,160 from the previous year that were not recorded in this number. And so that brings our annual total to $9,432 with an average so far of $3,144 per week. So that's it for this week's update. I really thank you for dropping by, and if you have any questions or comments, please drop them in the comments section below. It does help the algorithm, and I'd love to hear from you. Like I said, I am working on building a community here, so whether you are a new trader and have questions about anything that I'm going over, or if you're an experienced trader and you have some suggestions for me, maybe some things I can learn from you, certainly add those in the comments section. And I'm just getting started here, so if you like what you're seeing so far, please make sure to like and subscribe because there's a lot more coming and you don't want to miss it. So hit that notification bell and take care for now, and I look forward to bringing you more better options in the future. Bye-bye, everybody.